Good morning. This is Larry Edelson for my Uncommon Wisdom market update video for Thursday, July 29th. We're seeing quite a bit of action this week, choppy action nonetheless in the main markets that I've been following for you. That is in gold, the dollar index, and in the Dow Industrials. So let's go right to the gold charts right now. Over the last week or so, I told you I was expecting a retest of support at the 1180 level in gold. We did get that, and gold did on Tuesday and Wednesday break down below that minor support level. We are now reaching a very important support in gold at the 1160 level. There's a chance that gold could fall a little bit further down here to the 1140 level. I am not bearish on gold here, other than very, very short term, intermediate term, and long term. Gold is making an important correction here to head higher in its longer term bull market. I may be issuing some important buy recommendations in the next few days in gold. I would love to see it trade down to the 1140 level. That would make gold cheap in my opinion, and mining shares even cheaper in my opinion for the next big move up, which will likely begin sometime in September. So we do have a little bit more sideways action here. It looks like we might be getting an early cycle low in gold, so I do want to be a buyer even if the upside does not materialize until later August and into September and going into a autumn rally. So please stay tuned. We have some important action here in the gold market. Let's go now to the dollar. I'm bringing up the dollar index chart here. Last week I also told you to expect some meandering lower in the dollar index with a test at the 8150 level in the dollar index, and you can see here that the dollar is coming into support at the 8150, 82 level. It's important that the dollar hold this and get a bounce back up to say 85 in the dollar index. As you can see here, back to the June highs, this is not a pullback in the dollar index. This is showing you that the long-term bear market in the dollar index is still very, very much intact, even though we might get a little bit of a rally back here. This is a significant top, in my opinion, that was made in the dollar. And there's no question in my mind that we're continuing to see the net effect of a long-term dollar devaluation going on. So stay tuned here. I mean, I don't see anything much going on in the dollar in the next 4 to 6 weeks. However, if it does break the 8150 level, that would lead to some significant selling in the dollar. So you do want to stay tuned there. Any rallies in the dollar should be sold. Let's now look at the Dow. Last week I also told you in the Dow to expect a continued rally in the Dow Industrials up to 10.5, 10.6, this resistance area here. The Dow is a little bit stronger than that. We'll probably get a rally up to the 10.7, 10.8 level. I still, however, going into late August, early September, expect another decline in the Dow to 9,000, perhaps even 8,700. But I will say that this intermediate term, short-term strength here in the Dow is revealing the longer-term potential for the Dow to rally significantly on the back of a dollar devaluation. And that is, as I've indicated in my Real Wealth Report, something we need to be aware of. Even though the economic news is bad, the possibility that the Dow and stocks in general could reinflate on a longer term basis is significant, especially if a dollar devaluation is going on. So as bearish as the news is right now, you have to ask yourself, why is the Dow doing so well with such a terrible economy? The answer to that is it is anticipating the long-term effects of a dollar devaluation. Short-term, that doesn't mean the Dow can't go down to 9,000 or even lower to 8,700. It can. But I want you to look at the signs that the Dow is telling you, and it's telling you that longer term it may just inflate to the upside as the dollar devalues. It is separating from the underlying economic fundamentals. That's what we saw in 1932 to 1937, the Great Depression. The economy continued lower Unemployment continued to rise. There was no real massive turnaround in the economy, yet the stock market rallied 250% out of its 1932 low, completely separated from the economic fundamentals. We may just be seeing the same beginning process start to develop here, and that's something you need to stay abreast of and aware of, and I'm doing that for you in my Real Wealth Reports and in my Uncommon Wisdom columns. Till next week, please stay tuned. If you're in one of my trading services, we have some good positions that we just put on in the rally for the Foundation Alliance members. And in my Resource Windfall Trader, we just put on a inverse position, a short inverse ETF in silver, both to protect our gold positions that we're holding for a longer term scenario, and also for some shorter term profits, and that position's already starting to move. So stay tuned till next week. This is Larry. Have a good weekend.